All right, let's talk about Petco. They just dropped their Q2 earnings, and honestly, it created a bit of a shockwave. It's a really interesting story, all about a company that's decided to focus on profit, not just looking good. So let's get right into it.
So here's the big question that had everyone scratching their heads. You look at the top line, and sales were down 2.3%. Usually, that's a recipe for disaster on Wall Street, right? But the stock didn't fall. In fact, it soared. So what in the world did the market see that made them ignore the shrinking sales? I mean, we're not talking a little bump here. The stock jumped 22%. A move that big tells you one thing. The market was caught completely off guard. This whole story is a classic case of beating expectations, but, and this is the key part, not in the way anyone expected. So, to figure out why a 22% jump happened, we have to look past those headline sales numbers. We need to pop the hood, so to speak, and check out the engine. And that engine is profitability. This is really where Petco's story went from kind of meh to absolutely incredible this quarter. Okay, so check this out. This is where it gets really interesting. Look at the revenue line, just under $1.5 billion. Pretty much exactly what analysts predicted. So, no big deal there. But then, you look at earnings per share. The street was expecting a penny, just 1 cent. Petco delivered 8 cents. That is a massive, massive beat, and that's what got investors excited. They saw a company that's figured out how to not just sell products, but actually make real money from them. In this chart, this pretty much tells the entire story in one picture. We're looking at adjusted EBITDA here, which is a great way to measure core profitability. It jumped, get this, over 36% from last year, hitting almost $114 million. So yeah, sales were a little soft, but the actual cash this business is generating, it was exploding higher. This right here was the green light the market had been hoping for.
And hey, just a quick reminder on what adjusted EBITDA is, because it's super important here. Think of it as a clear view of the company's operating health. It cuts out all the noise like taxes, interest, and some accounting stuff to show you the raw profitability of the business itself. For a turnaround story like Petco, seeing this number surge is proof positive that the changes management is making are actually working.
But wait, there's more. It wasn't just that one metric. Their gross margin got wider, which just means they're keeping more profit from everything they sell. They also generated almost $54 million in free cash flow. That's just cash in the bank, a fantastic sign of a healthy company. And here's the kicker. They pulled all this off while cutting their inventory by nearly 10%. They got leaner and meaner without hurting the customer experience. That's some impressive execution. So, you gotta ask, how did they do it? Well, this wasn't some happy accident. Nope, this was all part of a very deliberate, very disciplined plan that the management team calls their Phase 2 playbook.
And the CEO, Joel Anderson, was super clear about this on the call. He basically said, look, we're focused on strengthening our foundation. They're not chasing flashy sales numbers right now. Instead, it's all about fixing the fundamentals of the business, making sure the whole operation is solid before they even think about hitting the accelerator for growth.
So what's in this playbook? Well, here are the key moves. Number 1, they're getting rid of what they call empty calorie promos. You know the type, deals that might bring in sales but absolutely crush your profits. 2, that inventory cut we mentioned, it was surgical. They didn't just slash everything. They targeted the stuff that wasn't selling. 3, they're optimizing how the stores are run, making them more efficient. And 4th, and this is a big one, they are clamping down on overhead costs. We're talking a $36 million drop in just 1 quarter. Serious discipline.
And management keeps hammering this point home. This is Phase 2. Right now, the name of the game is not growth, it's getting the financial house in order. That Phase 3, where they go back to chasing growth, well, that can only happen once this foundational work is done and dusted.
Okay, so because they're executing so well on this Phase 2 plan, management is feeling pretty good. They're confident enough to start talking about the future, but they're also not wearing rose-colored glasses. They know there are some challenges coming.
And this is the reward for all that discipline. They actually raised their profit forecast for the entire year. Now, when a company does that, it's a huge signal to Wall Street. They're basically saying, hey, that awesome quarter we just had, that wasn't a one-time thing. We think we can keep this up.
But, like I said, they're being realistic. They're giving everyone a heads up. Q3 is going to be tough from a sales perspective. Then in Q4, they're expecting to feel the biggest pinch from new tariffs. And as for when sales will actually start growing again, they're pointing all the way to 2026. The message is clear: be patient. And the CFO, Sabrina Simmons, was very direct about this. These tariffs are no joke. They're a real headwind that's going to get stronger as the year goes on. So all that amazing work they did to improve their profit margins, well, these tariffs are going to put that progress to the test, especially late in the year.
All right, so let's put it all together. You've got fantastic execution on profits, but you've also got weak sales and some big headwinds on the way. So what's our take? What's the next call for Petco?
And really, this is the debate every investor is having right now. Is this a real turning point for the company? Have they truly transformed into this super disciplined, profitable machine? Or was this just a relief rally, a dead cat bounce for a stock that's been hammered, with all the old problems just waiting to pop back up?
Okay, so here's what we're watching. Next quarter, they absolutely need to hit their profit target of 92 to 94 million. No excuses. As for the stock, expect a bumpy ride. Any mistake, and it'll get hit hard. But if they keep this up, they'll get rewarded. And circle your calendars for September 4th. They're presenting at a big Goldman Sachs conference, and that's where we should get the next big update on their game plan.
So where do we land? We're giving Petco a market perform rating. You know, we're definitely upgrading our view because you just can't ignore this level of operational execution. It's truly impressive. But we have to balance that excitement with the reality of the situation. Sales are still weak, and those tariff headwinds are real. They've proved they can manage their own house. The next step is to prove they can handle the storm outside and eventually get back to growing the business.
So there you have it, our deep dive into Petco's really pivotal corner. And as always, remember, this is not financial advice.